So we're now on our fourth lecture for consolidation as of date of acquisition. Okay, for the overview, we'll discuss first a recap. Ano nga ba yung acquisition of stocks? Ano yung concept nga? And then how do we account for investment in subsidiary in the books of the parent company or what we call the separate financial statements? And then let's try consolidation as of date of acquisition. For the recap, paano nga ba yun? Diba si A and B nag-combine after the business combination, A becomes the parent and B becomes the subsidiary. So, although separate entity si parent A saka si subsidiary B, they are still required kasi yung substance over form, di ba? In substance, since isa na lang yung may control sa kanila, isa na lang yung may-ari, edi dapat they have to prepare a consolidated financial statement. So, paano yung setup nun? Si A, magkakaroon siya ng separate financial statements. Si B, the same pa din. Kung ano yung reporting niya dati, ganun pa din. Hindi maa-affect ng business combination yung libro ni B. Unless, of course, B issues share securities, additional securities to the parent company. Then, yun lang yung entry niya lang doon. Pero, generally, the net asset reporting will be the same. And then when you combine the separate financial statement of A and the financial statement of B, you'll have your consolidated financial statements. First, let's focus on the reporting of the parent company, which is the separate financial statement. So, paano ba yun? Accounting for investment in subsidiary. So, si parent company, meron siyang option as an accounting policy choice. Pero dapat consistently i-apply nyo to all similar transactions. Meaning, lahat ng investment in subsidiary niya, dapat isa lang yung accounting na ino-nominate niya. It can be either the cost or the equity method. Ang difference nila kapag cost method, yung investment in subsidiary account mo will always be recorded at cost, no matter what. So, ma-affect lang yung cost mo kapag nag-record ka ng impairment ng investment. Pero it will always be presented as cost. Di siya mag-increase, mag-decrease kahit mag-income or loss si subsidiary kahit mag-declare siya ng dividends. Unlike the equity method, you equitize. Okay? So, kapag nagkaroon ng income sa subsidiary, tataas yung investment mo. Pag nag-loss, bababa yung investment mo. Pag nag-declare siya ng dividends, parang return of investment yun. So, bababa din yung investment mo. Tingnan natin yung entries. For the cost method muna tayo. Pag nag-acquire ka ng subsidiary, ang entry mo will be debit investment in subsidiary, credit, consideration, whatever consideration, you pay for it. Pag nagka-income siya, no entry. Okay, wala lang. Kasi whether income or loss, hindi mag-affect yung value niya. Kasi nga cost method ka. So, your investment in subsidiary account will always be recorded at cost. Kapag si subsidiary nag-declare ng cash or property dividend, syempre makaka-receive ka ng dividend. So, entry will be debit dividend receivable, credit dividend income. So, nagkaroon ka ba doon ng effect sa investment in subsidiary account? No. It will be still unchanged. Kapag si subsidiary nag-declare ng stock dividends, memorandum entry only for the corresponding or proportionate increase in number of shares with proportionate decrease in cost per share. Yun lang siya. And then, kapag nag-impair ka ng investment, of course, it will be a decrease, a credit to investment in subsidiary, debit impairment loss. Versus, tingnan naman natin ngayon kung ano yung entries kapag equity method yung ginamit mo. Okay, first, pag nag-acquire ka, same entry. Debit investment in subsidiary, credit whatever consideration you pay for it. Pag nag-net income, mag-i-increase under equity method si investment account. So, magkakaroon ka ng entry na debit investment, credit investment income. So, kapag loss naman yan, baliktad, debit investment loss, credit investment in subsidiary. Okay. So, kapag si subsidiary nag-declare ng cash or property dividends, your entry will be debit dividend receivable. Siyempre, makaka-receive ka. Credit investment in subsidiary. So, it decreases your investment account because it is presumed as return of investment. Yung dividends. Yun yung view mo kapag equity method. Kapag stock dividend, same memo entry only. Impairment will be the same: debit, impairment, loss, credit, investment in subsidiary. So, yun siya. Pag tinignan mo sa libro ni parent, in the separate financial statements, ang nag-a-affect sa income under cost method will be the dividend income only. Sa under equity method naman, ang nag-a-affect sa P&L mo dyan will be the share in the net income or loss of the subsidiary. Yan siya. Try natin, solve tayo ng problem under cost method. So, the problem is, P Corporation acquired 80% of S. Net income and dividends for 2019 are given as follows. Net income for January to June and for the whole year 2019. Dividends declared and paid on March 31, July 31, and December 1. Requirements: journalize entries in the parent company using cost method of accounting, and magkano yung investment in subsidiary account as of December 31, 2019. Sabihin natin at kaso alam mo na kaagad na cost yan, yung balance ng investment. Let's compute. First, journalize the entry. On the acquisition of S company, entry will be debit investment in subsidiary, credit cash for the acquisition cost of 245,000. That's it. For the share in net income, cost method ka, diba? So, dapat no entry. For the dividends from S company, so makaka-receive ka ng dividend receivable. And then you have your dividend income. Kung magkano yung na-receive mo. Which is computed as, remember that your date of acquisition is on July 1. So, yung dineclare lang, makaka-receive ka lang ng dividends from July 1. So, kukompute mo yon from July 31 and December 1 dividend. So, that will be 5,000 plus 7,500 times kung ilang percent lang yung owed mo kay S company, which is 80%. So, your dividend receivable and dividend income is 5,000 plus 7,500 times 80%. That will be 10,000. Okay, your investment in subsidiary balance as of December 31, 2019, still at cost pa din. That will be still 245,000. Hindi siya magbabago. Problem 2, equity method naman, same given tayo. Okay, entry as of acquisition will be the same. Debit investment in subsidiary, credit cash na 245,000. For the share in net income, may entry ka na debit investment in subsidiary, credit investment income, kung magkano yung income niya from date of acquisition lang. Remember, magkakaroon ka lang ng share sa net income niya from the time na acquired mo na siya, which is July 1. So, alisin mo yung net income niya ng January to June 30. So, paano mo yun kukomputin? That will be net income for full year 2019, 31,500 minus net income niya from January to June para makuha mo lang yung July to December. That will be 31,500 less 14,500 times ilang percent mo siya owned. That is 80%, so your investment income is 13,600. This is your share in the net income of subsidiary. Okay, for the entry on the dividends from S company, again, ang kukunin mo lang na dividends dito yung na-receive mo, which is 10,000. Entry will be debit, dividend receivable, credit, investment in subsidiary, because again, under the equity method, dividends are treated as return of investment. 10,000. Okay. So, consolidation as of acquisition date. Yung diniscuss natin kanina dito sa separate financial statements. Paano naman tayo magko-consolidate? Ganito yan. Kunin mo yung financial statements ni parent at book value. Tapos, syempre, si subsidiary yung financial statements niya. Book value din naka-record, di ba? So, i-combine mo silang dalawa, tapos magdagdag ka ng consolidation or working paper entries. Consolidation entries, elimination entries, working paper entries, ganun yung tawag sa kanya. So, ano-ano yung mga kasali doon? First, you adjust the subsidiaries book values to the fair value of the net assets acquired as of date of acquisition. Second, alisin mo yung investment in subsidiary account. Yung na-record natin kanina na investment in subsidiary account sa libro ni parent, tanggalin mo yon. ilagay mo yung goodwill sa conso. Again, yung investment in subsidiary, lumalabas lang siya sa parent. Yung goodwill sa NCI naman, lumalabas lang siya sa conso. Okay, so isang clue na yan eh. Pag tinanong ka, how much is the investment in subsidiary account in the consolidated financial statements? Definitely, sagot mo 0 kasi di ba ina-eliminate mo nga yun. Tapos what if naman ang tanong, how much is the goodwill or the non-controlling interest in the separate financial statements? Ang sagot doon 0. Kasi alam mo na ang goodwill sa NCI, kinocompute mo lang in the consolidated financial statements. Clear? Then, pag na-complete mo na yung consolidation entries, you'll now have your consolidated financial statements. Okay, let's try a problem as of date of acquisition. On January 1, P Company purchased 90% for 16 million pesos. P Company paid 500,000 as direct cost. P Company also has to pay 4 million if S Company maintained existing profitability and it is highly probable na mag-meet niya yun. The fair value of the contingent consideration is 4 million. Your NCI is measured at proportionate share. So, given yung book value ni parent, pagdating kay subsidiary, given yung book value and fair value as of acquisition date. Requirements. Journalize the entry in the books of the parent company, and then compute for the non-controlling interest and the goodwill. How much is the consolidated shareholders' equity as of the date of acquisition? And then finally, ano yung consolidation entries mo? Compute tayo. First, ano yung entry sa libro ni P? Diba ano nga yun? Magre-record tayo ng investment in subsidiary. Computed as, magkano yung consideration transferred? 16 million plus the contingent consideration at fair value of 14 million. That will be 20 million. Plus, debit the direct cost which is expensed under PFRS 3. Debit expenses, 500,000. Credit cash for the payment, which is 16 million yung pinambayad mo na, plus the 500,000 pesos paid na direct cost. Credit your liability for the contingent consideration, which is 4 million fair value. Okay? Next, how much is NCI and goodwill? Computed as consideration transferred, 20 million. Plus the non-controlling interest at proportionate share, which is magkano yung fair value of net assets acquired. That will be 21.9 million. Kunin mo yung fair value ng total asset ni S Company minus the total liabilities at book value ni S Company na 2 million. That will be, magkano yun? 19.9 million. Times 10%, 1,990,000 pesos. Your total value of the business is 21,990,000 less the fair value of net assets acquired, 19.9 million yung kinompute natin kanina. Your goodwill is 2,090,000. Okay. Next. How much is your consolidated shareholders' equity as of acquisition date? Computed as, magkano yung share capital ni parent company? Kasi yung share capital ni S Company, that's eliminated. So, mag-start ka sa share capital ni parent company, which is 12 million pesos. Tapos, yung retained earnings ni parent ulit, which is 3.2. Pero, wait lang, nagkaroon ka ng expense, di ba, ng business combination. Meron kang direct cost na 500,000. So, i-deduct mo yun sa retained earnings kasi expense mo yun. So, your retained earnings, consolidated retained earnings as of date of acquisition is 2.7. Ito lang isang tick. Kapag ang na-compute mo, na-compute kasi natin kanina is goodwill. Pero pag ang na-compute mo dyan ay gain on bargain purchase, di ba recognized mo yun through P&L? So, idagdag mo yun sa consolidated retained earnings as of date of acquisition. Pero since wala, so 0. Your consolidated retained earnings is therefore 14.7 million. Okay. Ngayon naman, ano yung consolidation entries mo? Diba sabi natin, ang consolidation entries natin, first adjust the subsidiaries book values to its fair value. Minus, i-eliminate mo yung investment in subsidiary na ni-recognize ni parent. Idagdag mo yung goodwill sa NCI. Your consolidation entry will look like this. So, ito, ang ginawa ko, straightforward na dinebit ko na at fair value yung net assets ni subsidiary. That will be fair value ng cash, AR, inventory, plant and equipment, other assets, and the liabilities of 2 million. Tapos, debit ka ng goodwill na compute natin kanina, 2,090,000. Credit ka ng non-controlling interest computed at proportionate share kanina, which is 1,990,000. Dapat balance yan. Check nyo na lang. Pero I think balance naman yun. Okay, that's it. That's our consolidation as of date of acquisition. If you got a question